We're here to talk about growth strategy planning. And what's nice about this conversation, this is one of the few times when we don't need to stop ourselves and say, hold on, how are we going to execute? What are we going to do about all this? Um, which is a normal thing, especially in today's business environment. Everything's very brass tacks. What are we doing about all this? But today we get to fly a little bit higher, try to see a little bit, more of the landscape and the horizon ahead. And that's fun. That allows us to get back in touch with why we're in business in the first place, right? And it's really not about winning a contract, delivering the work, collecting the money, and doing it all over again. I don't suspect anybody in this group shows up to work in the morning with that on their mind. So let's get into it. We'll talk a little bit about a number of things, but really rallying around a single objective, which is let's look backward, think about what the past and present can teach us about our business, but then let's turn the corner and just look forward, create a roadmap for future growth. And I'm going to walk you through, a multi-step process. But before we get into that, let's talk a little bit about why growth strategies fail. Because what we're doing is not unique. Everybody goes through some version of this process, and in many cases, they do it over and over again, sometimes in real time. But there are a number of reasons why growth strategies don't hit the mark. One reason would be the vagueness, right? Lack of clarity. So I think the best example here is actually not a single company or brand name, but the many companies and brand names that were once considered unicorns and then crashed at the turn of the millennium in the dot-com bust. What did those companies have in common? Well, largely, a lot of them couldn't find revenue models because they didn't really have a sense of what they were building, who they were building it for, and what they were working toward. We were just coming to understand the internet a quarter century ago, and it's easy to say there was a lack of discipline. The truth is also we didn't know what we know now about those technologies, but you can't have a vague strategy that definitely will not work. Another thing that holds back these strategies is rigidity. So you think about Blockbuster, really the number one brand in video rental, which was a market that they helped create right around the time when people could only go out to the movies, and Blockbuster was part of the innovators that showed us a different way. But then a generation passed and the competition from streaming was knocking on their door. And what did they do? They decided to stick to their guns, but they did so at their own detriment. And what it led to was a sort of blindness and tunnel vision that eventually did them in. Accountability. So when we think of Kodak, unfortunately in 2025, we think of a laughingstock. We think of a brand that missed the boat on digital cameras. But the truth is, about 50 years ago, Kodak actually invented the first digital camera. They were so entrenched in their leadership position in their industry that they knew what was coming. But what happened was there was a failure to assign accountability for different aspects of the vision that they had in mind. And that vision of a digital camera half a century ago turned into nothing. And they got beaten on many fronts by many types of competition. And finally, we have my favorite, the shiny objects. Nobody wants to be accused of chasing shiny objects, but when they're shiny, the last thing we're thinking is, hold on, I better have some discipline about this. And companies like WeWork should be a cautionary tale for that. If you simply look at press releases for all the different acquisitions they made in the 2 to 3 years leading up to their demise, that demise doesn't look so unexpected. It looked like they were trying to buy every kind of company that could somehow loosely be related to their business model, and effectively, their eyes were bigger than their stomach, so to speak. And so all of these are reasons why growth strategies fail. There are many other reasons that we could spend a whole session getting into, but I just want to think about some of these just so we're aware of the discipline that we need in this process. Like I said, we'll start with a reflection on the past and present, use that as a chance to learn and put some context around our discussion, but then we'll get into a framework for planning it. How do we set the metrics that allow us to benchmark that progress and measure our way to success? What are some milestones along the way to help us understand if we're making progress? and finally, a few tactical ideas at the end for how you can actually put this to use. So, assuming that sounds good, and I would invite you to interrupt me at any point in this conversation. I will occasionally prompt for questions, but feel free to jump in. We have a small enough group that we can keep it nice and intimate.
I just wanted to say something. Oh, go ahead.
No, go ahead, please, Jonathan.
I really like that you brought up the dot-com era. I was a teenager, right, working for a place here in Maryland called the Digital Express Group. And our big thing back then was web hosting, right? We had Ford, TWA, Martha Stewart Living, J. Crew, and E-Trade as clients. We got bought by a little company called Intermedia Communications out of Florida, which in turn got bought by a very large company called MCI WorldCom. And that growth strategy was basically on MCI's part to hide that $4 billion purchase on their books, and they famously went under around the same time that Enron did. So seeing that as a teenager definitely colored my own, starting a company. It was like, okay, well, let's avoid that, right? Let's avoid those pitfalls.
Right.
So thanks for mentioning that.
Absolutely. I appreciate you bringing that up because it's a reminder that these are not just links on a page. These are not just, symbols on a stock ticker. But these companies have real implications. And one of the things that we learned from the dot-com era was not just about lack of discipline, but it was also about lack of moral direction. So you bring up MCI WorldCom, great example, certainly not limited to MCI WorldCom, but the idea that we're also in business to set the agenda and set an example for how business should be done. And I think small business is in a unique position to really kind of create that standard. So looking back, let's consider a couple of things. Whenever you sit down and get yourself into an environment where you're going to tune out all your distractions, close the inbox and the notifications, and just think, okay, what have I learned from the X number of years I've been in business? Some things to consider. You can think about revenue trends. Of course, this year was up, the next year was down. We have different metrics, growth rate, seasonality, et cetera, that can tell us a story of the trajectory of that business. There's also the story of our customers. If there was revenue growth, that was on the backs of your customers, but not all of them are created equal, right? And so in some cases they're up, in others they're down. And the way in which they're acquired, serviced, and retained can really tell a story. The unit economics, always meaningful, especially if you have outside investors looking at your past performance. But of course, acquisition cost, lifetime value, gross margin. These are some examples of how you might look at the past in order to set the table. Your operational capacity, right? A lot of companies grow revenue real fast. Other companies grow headcount really fast. And in some cases, they don't always grow in lockstep with one another. So how is capacity growing? How is the efficiency of that capacity also changing over time? Product market fit, perhaps the mantra to guide all of this is, are we building something that people actually want? Effectively, that's what we're answering. And if the answer is no, you either change what you're building or you find different people who have different wants. It's really that simple. But of course, breaking it down into all that nuance, not so simple. Strategic decisions. At some point in that past, whatever that span of time is, right? Some of the bets you made might have paid off, others didn't. Others might have delayed. You might have always wanted to enter that new market or cater to that new customer, launch that new product. And sometimes looking backward can actually give you really good context for how to think about it going forward. Finally, culture and team. This one is deliberately last because it's the furthest from direct revenue and operational efficiency and all that, and it really is the hardest to measure. But a lot of your past and present story, if it's positive, you could largely attribute to the fact that you have some values in place. You are a certain kind of employer. You treat your people a certain way, because ultimately, I really believe that the best growth strategy is not on the back of the product, but it's really on the back of the people responsible for that product, whether they're selling it, marketing it, counting the money, whether they're actually building it, listening to customers, whatever it might be. So That's a lot right there. And you might be talking about many years of work, but at least this hopefully gives you a sense of how to organize your thinking. And maybe you just take one of these at a time, but hopefully it starts to help you build a sort of a dossier of the past and present. And then from there, you can also start to really ask yourself some questions. What are the patterns that we've seen? Are some of those wins really deliberate that we're following this strategy? Or if we're being honest with ourselves, is it possible that some of these were just dumb luck? Happens all the time. Number three, were there any failures where you completely blew it that actually informed a pivot or some redirection of your approach? What was the difference between the response you expected and what you got? When you launched a product, did it go as planned? Um, how do you feel about the way you spent your resources, be it your own time as a leader, the capital, either your liquidity or the backing of your investors, but also the people, the capacity you had on your team. And if you just rode that wave, what would that look like in 3 to 5 years? If the past and present story is a happy one, there's probably a wave you're riding, and you might find that in 3 to 5 years' time, you can just collect revenue, pad your accounts, right? And maybe that's your goal. But I guess the real question that's buried within there is, what are the things you can do to take it from that baseline to some higher level? And finally, what indicators from the past are you going to continue to drive forward? So when you look at those KPIs, which are the ones that you believe tell not just the best or the worst story, but the most accurate and honest story about the direction of your business? So I'll pause for a moment. Since we're a small enough group, ordinarily, like I have polls that we can look at this stuff at scale. But if you want to just shout out, if anybody has a particular interest in one of these questions and maybe wants to offer one of their own answers too.
So in the category of number 3 there, failures, right? When we started Arcadian 14 years ago, getting into the market was it was seemed like an insurmountable thing, and we tried everything, right? One of the things that we failed at the most was purchasing advertising and ROI on purchased advertising. We tried everywhere, right? We tried supermarkets, we tried gyms. We're spending thousands of dollars doing all of this advertising, and it's getting us next to nothing on ROI. Yelp included. We brought them in for a analytics review. We spent $1,500. We got like 18 phone calls and 64 web hits. So that in the start of the business was a massive failure. And what we found was that nothing mattered more than organic reviews on Google.com. If we got organic reviews from the local population, the phones rang off the hook, people came through the doors. So that was a learning process for us right there, is where to apply those advertising dollars and what the most effective ROI was on that.
Yeah, I love that story because it's a movie I've seen 1,000 times, Jonathan. I started in the media agency business, working with upstarts, working with entrepreneurs, professional service providers, right? And working my way eventually up to growth stage businesses. And I started to realize how they think about marketing. And as a marketer, I'm comfortable saying this. I think the best marketing is the marketing that you don't have to work so hard on or spend a lot of money on. And so when you find the right audience and reel them in and do a good job and get them to evangelize on your behalf, that's just the course of doing business. That's not media, organic or paid. But you compel them to go leave those reviews. They're doing it on Yelp, they're doing it on G2, or they're doing it in public and on social media, wherever it may be. They're effectively telling a story that you would otherwise have to pay to tell. That's paid advertising. People do it, but it should be the icing on the cake. And the cake itself is made of all of that organic affinity for your business, your product, the service you deliver, and the promise you made and kept, right? And so I love that. I think you clearly learned that lesson, and you're going to probably, since then, if not in the future, double down on getting those good testimonials, referrals, case studies, etc.
What we've implemented in the last few years with this, and something that I've always been really shy and timid about, which I wish I wouldn't have been shy and timid about, when we have a really great interaction, I straight up ask for it now. It's like, hey, look, this went really well. Could you please take the time and leave us that Google review? It's how we grow. And when we phrase it that way, I'm thinking 90% of the people that I approach that way about leaving a review, they leave that review. And it's been huge for us.
That's awesome. I hope everybody's listening, because that is a dead simple and very effective strategy. So thank you for sharing that, Jonathan. I'm going to keep moving here. We're going to get into, this is the meaty part, right? So now we're through the bread. We're getting into the cold cuts and cheese here. The planning framework. How are we going to do this? So I'm going to give you 6 pieces. And these are not terms that you're unfamiliar with, but just so that we are comfortable with our terminology here, let's go quickly through the definition. We start with why we exist. What is the core purpose we're serving? From there, we get a little more tactical and we start to think, okay, well, what would that look like? Call it 3 to 5 years. That's a time span we're going to be talking about a lot today, right? What does that look like in 3 to 5 years? And from there, it becomes very simple to say, well, what would we have to do to get there without hunkering down to do the work? Let's at least talk about some goals. What would it look like to deliver on this mission and bring people along for the ride? Well, there are some outcomes. It might be this level of revenue growth. It might be this successful product launch, but it might be, hey, we are recognized as the #1 IT managed service provider in the Southeast, whatever it might be. That's when you get into the strategy. That's when you now say, okay, we know where we're going. We have goals, and we have to really define what are we spending our time on and what's a waste of time. It's really the most simple question when you're thinking about anything strategically. That will make the tactical elements so much clearer, because now you can say, all right, either it's in or out. This is one of those times when there's no gray. It's either in or it's out. And if exploring the gray area is part of your business strategy because you need to innovate, because you want creative ideation to be the lifeblood of your business, that's fine. You make that a pillar of your strategy, but you don't leave it in a strategic gray area. Finally, you have metrics. This is real simple. These are the numbers. These are the benchmarks. So if we were growing at X and bringing in Y revenue, how does that change over time? Well, that's the most obvious example, but it might be customer satisfaction. It might be social media credibility. Doesn't matter. The point is you need to choose those metrics. Now, we're here to talk about strategy. So that's why I'm going to double down on this one, but also keep you mindful of the flow. We're talking about strategy, some additional things, some principles to keep top of mind. If there's anything you get out of today's session at all, it's that if you have too many priorities, none of them are priorities. If you don't stand for something in particular, you stand for nothing. And so it's very, very easy. And I've worked at companies where we have so many good ideas that you look at the whiteboard and you say, how can we miss? How can we possibly fail? This is a plan worth its weight in gold. But it's not a plan until you say, we're going to pick the items on this list or on this whiteboard that we can do to 110% of our ability, and the rest of it we dedicate exactly 0. So focus 3 to 5 areas. Like I said, it's a good number just to think about for all of this. 3 to 5 areas of leverage. Define those as pillars and say, if we're building a house, this is the foundation. These pillars are what hold up the rest of the house and the roof and everything, right? And it has to be something that moves you closer to that future state, that mission, that vision. Double down when you see that advantage. So this isn't a static thing where you do it once and then check in 3 to 5 years later. You're checking in constantly in real time. And you start to see that, hey, we had 3 pillars of our growth strategy. And because things have changed in the operating environment, the economy's changed, the customer's needs, the product is finding some hurdles. Okay, then maybe we pull back and we have some other pillar where we know we can plow more resources. That's part of strategy. It doesn't. It does. This is where there is gray area, but also aligning those pillars to bottlenecks. And so this is where, for once, you're not obsessing over your customers' needs, but you're thinking about your own needs, and you're saying, all right, I have been growing well, but I need to demonstrate to my investors that I can manage a better cash conversion cycle and improve cash flow the next 6 months. All right, what of these pillars is going to get me there? Hopefully, they all contribute in some way. Maybe it's not about financial runway. Maybe it's about your own employee retention. Well, we've grown well as a business, but people keep on leaving, which means we're spending a big share of our operating budget on recruiting, and the time of our executive team is being diluted, the time and impact, because they've got to come in and do all these interviews and have this talent strategy that doesn't seem to be picking up traction. Okay, well, then a strategic pillar better be to figure out your people plan, right? A few more. It's perfectly good for you to have some pillars focused on growth while others are playing more defense and protecting the foundation of your business. Maybe you've got two products. One's in a mature market, the other's in an emerging market. It's a perfect example where you might need to throttle your attention from one to the other based on how important it is to venture into the unknown, get the first movers advantages, get the jump on the competition, versus taking care of those cash cows, aspects of your business where maybe the future potential is limited, but you know, with a relatively low amount of effort, you can collect a lot of revenue at a high margin. It's a perfect example of how to sort of think about those two side by side. Now, one other thing that's really important about defining your pillars is that they need to be measurable. If they're not measurable, they're not useful to you because there's going to be a binary outcome. You're going to set the pillar, you're going to say this is part of our growth. And if they're not measurable, you're basically committing to a very uncertain future, which is at some point, somebody, either me or my investors, or worse yet, my creditors, are going to say, is this working, yes or no? And if the answer is no, you don't really have much ability to manage towards a different outcome. You basically have to plant the white flag and say, all right, we lost. Nobody wants to accept that. None of you as business owners, I'm going to assume, are okay with taking that kind of a forfeiture in the business you worked so hard to create. Last one. Investors, employees, and customers, your three key stakeholder groups, they all need to understand why these pillars matter. And I'll include in that group board members. Sometimes board members will throttle different groups. You know, they might also be investors. They might also be operationally involved in the company. Point is, everybody who has a horse in this race needs to see with clarity why these pillars matter. Okay, so ordinarily I have a poll that I'll run, but since we have a smaller group here, I'll take out the incremental experience of dialing into the poll, and let's just answer the question outright. So, what are some strategic pillars that could become future growth drivers for your business? Open-ended. Any responses from the group?
Artificial intelligence. It's huge. Every small business is going to need it, and we have started building machines. Right now, it's for government contractors mostly, but we've started building machines where they can build their own large language models. And I really think that's only going to skyrocket as small businesses start adopting it locally. I really do. I think that's going to end up being one of our pillars.
And so I think that's a great perspective. And I would say, first of all, I wholeheartedly agree with you. I am also founding a company in the AI space right now. I spend part of my time on that, and certainly agree that despite what you read, amidst all this chaos, there is going to be some real breakthrough innovation. I would also add or build on your answer by saying artificial intelligence is a focal point, right? But to call it a strategic pillar, we're going to say we're going to tie that to a real state of the market. So basically, for it to be a strategic pillar, we would go beyond just identifying artificial intelligence, and we might say a pillar of our strategy is to leverage the market opportunity of the AI marketplace to the fullest. Or we are going to position ourselves to grow alongside the explosive adoption of AI, period, full stop. Right. So I think you see the difference. And probably something is in your mind about exactly where your place is in that world. But I think it's a great example. Any other examples before we
I
move
say
on?
raising brand and brand visibility is going to be really critical because there's a lot of people building AIs, a lot of people building all kind of stuff, but without nobody knowing them or them being able to come out and say this is who we are and this is what we can do, then they're basically a shot in the dark. And it's, I just been hearing a lot about Oracle and their great merger with OpenAI, and all of a sudden there's a ton of commercials now. They are onboarding and bringing. I mean, they went all right guerrilla marketing to see if they can onboard people to their cloud software. I mean, one piece of news is just piggybacked on it, and so I think nobody was talking about AI 3 months ago until they made that merger, and now they're just riding that wave through radio marketing, TV marketing, and online marketing to bring awareness to their brand. And so I think that's going to be major. If you can't be found, then nobody knows about you.
Yeah, it's everyone's got a story to tell, and I think that it's become harder than ever to tell that story in the midst of all this noise, right? Finding that signal in all the noise is a major, major challenge. Every day it gets harder. Cynthia, were you going to add something?
Yeah, I wanted to share, I just did a AI video on Instagram, and I just wanted to see how it would work and how would it, we're actually doing a fundraiser for my second location. So, and that's what I messaged the fundraiser with my voice, and all I did was share my picture and what I wanted to say, with the young lady that works on my social media for me. She created an AI video, and I have 16.7 thousand views on it. A lot of comments, a lot of people loved it. We also put our fundraising information on there, how they could support our daycare. But it's really taken off, and I really like it. I was kind of afraid to do it at first, um, but I think it's working. It's working. I've gotten a lot of people go on the website. My website, I got an email yesterday. Let me just kind of pull it up real quick. My website, I think I shared with everybody in the last meeting. We had went viral on one video, but my website got about 420% of it went up, like 420% of hits to Google, which was amazing.
Yep. So having observed those metrics, Cynthia, having
Mhm.
seen, how much exposure these little tactical things that you did actually got for your business, what do you think how would that lend itself to a strategic pillar where you could say, hey, I want more of that? So
I
how
think,
would you define that in a strategic plan?
well, that's what I'm going to do. I'm going to go ahead and probably do more of that AI, because I see people are really loving it and people are really in tune to it. You know what I mean? I didn't think it would. I was kind of afraid, like I said, to do it, but because to me, to be honest with you, I don't know how to describe it, but it seemed like it was kind of fake information, or I didn't seem real. Like I was explaining about my fundraiser, but I was afraid to see if people would say, "Hey, is it something I want to, you know, help out with or donate to?" Or a lot of people, I didn't know how people would take the AI of it, or do they just really want to see me talking without the AI, and they want to see me explaining about my business?
Cynthia, can I say something? When
Yeah.
you showed that video at the last meeting,
Yeah.
I saw the video about the fundraiser. I didn't even know it was AI.
Oh, you didn't?
No.
Yeah.
Wow.
You got to remember, we're always our biggest critic.
Yeah.
You're always your biggest critic. So I'm telling you from my eyes.
Okay.
And I showed it to my mom. I didn't even know it was AI. So
Wow. Okay.
So one research we're doing here at Jax Media is that authenticity is going to be a major factor and what's real and what's not. And so we may not experience it now, but in a year or two, there's going to be a huge topic in terms of what's real and what's not, and is it genuine? And so I do want to, advise to be cautious, and, if you want to mix it up, it'll be great, 50-50, 80-30, or 80-20. And so that way, when that do come up in terms of users catching on, we don't want to just focus on the amount of clicks and the amount of views, but I would encourage you to focus on who all clicked through my form, did anybody fill in the form? Focus on the numbers of, I got 5,000 clicks today, and did I get 3 form fill in? Did somebody call me? I would put focus on tracking the phone calls, the form fill in, whoever reached out. So ROI.
That's a great segue. Thank you so much, Harold, because we are talking about strategy, right? So before we get too tactical, where we think about a single video generating a single set of metrics, the best thing to do would be to use that, right? Exactly the way you're saying, as a lens for the rest of the business. And so we're going to talk about measuring progress. And that basically means choosing those metrics. Maybe it's video views, like Cynthia said. Maybe there's something else. Maybe it's website traffic. But there are also business metrics that we want to be focusing on. So let's get into the different kinds of metrics. I'm gonna bring this down to 3 different types, right? There are the operating metrics that allow you to run the business. There are the investor metrics that really allow people outside the business to evaluate where you're headed and are you worthy of their investment, right? And then there are the visibility metrics, such as the one that Cynthia mentioned, which basically say, hey, I created a video. Doesn't even matter how it was created, because that's a lot more tactical. For the purposes of strategy, what we're saying is video connected with our audience. We proved it once, and if we do it again, we think we will prove it again. And that's a great example of a visibility metric. So I'm not going to go through these line by line, but I'm just, since you're going to get these slides afterwards, I'll leave these here as a cheat sheet for you. And, looking at some of the industries represented in this cohort on this call today, I tried in some cases to also break it down, like, the daycare model versus a restaurant versus IT managed services or, some other industry. And so what you can see here is that for operating metrics, there are so many of them that we use to look at our business day to day, week to week, et cetera. Some of them are going to be customer centric. Others are going to be more about the revenue that's coming in and the profitability. Others have less to do with the money and more to do with what goes into creating that runway, that business, right? And then quality metrics such as, do we deliver on time? Do we deliver to the fullest? There's a lot of different ways to measure that, and it varies a lot by industry. Now, what varies less by industry are going to be some of the investor metrics, because you'll find investors that are specialized in a particular vertical or a specific business model. But the truth is, all of them really, they look at a vast array of metrics, and there's a lot of overlap from one to the next. So you can see some of the examples here, right? The first one under investor metrics, customer acquisition cost to lifetime value ratio. It's very simple, right? If we can keep the CAC or CAC low, if we can get the LTV high, that's great. If we can do them both simultaneously, that's even better. You prove that to an investor, and now you have to do less begging, and you're in a position of leverage. You can get better terms. If they're going to write you a check, you don't have to part with as much equity. Or if it's a bank, you could probably get a better rate, right? So there's a lot of different ways to look at it. We talked about, such as Cynthia's example, of the second to last item under visibility metrics is followers, likes, shares. You could put video views in this too. Leading directly to website traffic, or in a different business, it might be app downloads. These are vanity metrics. That doesn't mean they're not valuable. They're just not directly tied to revenue. Now, all of these on this slide and the preceding slide, there's going to be some cocktail of those metrics that you're going to choose for your business. Now, we're not in today's conversation, we're not going to hash it out for each and every one of you, but I wanted to at least give you a roadmap for how to think about it. And we'll get into some milestones. So now that you have looked backward, digested the sort of past and present of your business, and you've started to look at some of the strategic pillars and basically said, okay, we have a sense of what are the few things we're going to plow into, put all of our effort into to execute on this 3 to 5 year growth strategy. A second ago, we defined some of the metrics that we're going to use to benchmark. How do we know if it's working or not? When we check in every day, every week, every quarter, whatever it might be. Now I want to give you a snapshot of what those 5 years are going to look like. So what would it look like to have a crystal ball and look into the future? Well, in year one, you've defined those pillars, you've done everything we just said, and you've actually put those insights to use. And you've basically said, okay, we're now running a tighter ship. We have better systems in place. The unit economics reflect this. So, we're able to get a new demo or attract a new customer at a lower acquisition cost. We're able to retain a customer doing less work. Those are great indications of an improvement in unit economics. By year two, you've established repeatability, and you basically said, we see what's working and we double down, and it's working some more. And that shows your stakeholders that you mean business. This is also a good time to think about expanding your leadership team and saying, hey, we're in year two. Look at this trajectory. Jump on board. And you're going to find that if you're diligent about this growth strategy and have some quick wins and some success to point to, that you can punch at a higher weight. You can start attracting more and more capable candidates, A players, to join your team. By year three, it's not just repeatable, but it's become predictable. You've done enough business cycles and proven that repeatability where you can say, hey, what we did in year one and year two is working. It's working in year three. And I think that's a pretty good indication that it's going to continue into year 4, 5, and beyond, right? This is also when you might start to get really excited about not shiny objects, but new opportunities. You know the market, you listen to your customers, you have your own vision for where your business is going, and you might say, hey, there's a segment that is underserved. And if I get in, I could have the jump on everyone else in my competitive set. So this is when you start to have the confidence to do that. By year 4, some of those new pursuits have turned into new businesses. And what used to be a single line of business might be 3 lines of business. Maybe your managed IT services branched out into building value-added consulting for AI. And it's turned into a high margin business because you know your stuff and you present the same workshop to different people, and it's building opportunities in your managed service pipeline. That's a beautiful thing, right? So you're optimizing and you're also strengthening the governance, which means you're bringing in advisors and you're starting to go higher and higher level discussions where you talk to your board not about, hey, we're meeting our targets. You're talking to your board about, we have a chance to go from local to regional or regional to national or global. We have a chance to enter this new business. We need your help to get investors on board, or we need your help to approve a bunch of new hires to get some really important work done. By year 5, you can go into a funding conversation or speak to a potential acquirer and have a really strong, solid position on which to negotiate. And that means you've been hitting your numbers all the while. And you might also feel like it's time to think about your exit, because odds are you've worked really hard to do all the things on this slide right now. And so effectively, what are you doing? You're saying, hey, I'm going to stay involved on my terms, but I'm also ready to hand the reins off to someone else for them to do the work. And I can sit back, drink my cocktails, do whatever it is I want to do, with my life. So again, typically I would have a poll here, but I think we can just, I think we have time for one contribution here. So I'm just going to ask the group, what is an external risk that could derail your growth? And I know we all want to say the current economy. I certainly would be the first to raise my hand for that. Let's leave economic out of it and think critically about your business. I'll scroll down the page just to give you a few ideas of what it might be here.
Mm-hmm.
I already see mine.
Yeah, I saw mine
Yeah.
right as soon as this popped up. I didn't even need to see this. For me, it's staff. I
Staffing.
feel mine tied. Yeah, we are built around relationships, building those relationships to hold retention. So as staff turnovers, then you'll get customers that will cancel and then of course take friends with them. And so we always have that little change
Yeah.
to
Yeah.
have
That's
to
a,
rebuild.
I love that example, Ayana, because I think it's a problem that we're not talking about enough as a business community. We're looking at staffing in a very narrow sense of people losing their jobs to AI, and that's important. But I think what you're talking about is also a problem that's been going on for much longer, which is that the eligibility of people to do certain jobs,
Yes.
the ability to show up to work with the skills
My
that
God.
their employer needs them to have, those skills are not in supply the way they were 10 years ago, and probably the way they will be 10 years from now. But we're in an awkward period right now where our education system doesn't necessarily prepare people with all the practical job skills that they need. And so there need to be other places to get it. In the meantime, you're running a business, the show must go on. You need those people today. And I empathize with that, Ayana, because it's a big challenge. And like I said, people, that business, the people budget item is typically the biggest one at any company.
Mhm.
Not everyone, but almost everyone, I would wager, their biggest line item is payroll. And that's an enormous investment. You've got to get it right. And if there's disruptions in supply and demand, it can have a huge impact on your business, whatever industry you're in. So I would argue that probably more of us should have staffing as some link to some strategic pillar than perhaps we realize. Thank you.
I like to add. I like to
Go
add
ahead.
to hers and what you're saying. I think it's just everything we do and where we're headed. I feel like it requires discipline, even the realm of AI. And if they're not teaching them, if they're having struggled now teaching the kids discipline, like, and they have to skip that and teach them computer and I won't be able. I mean, I try to hire. I have all the space here to hire like interns, and they hardly stay because they want to come and show when they. I mean, like, I don't know where we're going, but even from a strategic perspective, we are trying to at least have a longer onboarding process to teach them that discipline of how we do business, of how we perform. You know what I mean? And so I think that's something every company is going to have that long 6 months training for every new entrant to make sure they align with their vision and mission.
I love that, and I love that word discipline, Errol, because I think that there are a lot of different definitions for discipline in the workplace, but the one you're talking about really is taking discipline and its accountability, like we talked about in that first slide, right? Why did Kodak fail? Because there wasn't the accountability. But what you're talking about is saying, hey, it's on us as the employer to
Yeah.
give you, the new hire, the skills you need to be successful. We set you up to win, then we win together. If we don't, it's quite the opposite. But who loses? Yeah, the person who maybe gets fired or leaves the job after 6 months, they lose, sure. But you lose too because you spent 6 months waiting for them to perform and they didn't. You spent 6 months training them, which you could have spent that time and money on something else. And in the meantime, your competitors moved forward and you didn't. So for all those reasons, I think discipline is a great mantra for how the people pillar of a strategy can manifest. Love that. All right, resources. I'm going to leave you with a couple things that you can hopefully utilize on your own to take some of this conversation to the next level. So I'm going to focus on a smaller handful, but really impactful ones. Financial tools. We talked about a lot of metrics, right? You might be looking at some of those and thinking, how on earth do I begin to actually crunch these numbers and tell a story? Well, there's some really interesting models available for free download from this website called Foresight. And you can download all manner of different models. A lot of them are free. So I will point out they sell some of these models, but the ones that I've listed, the bulleted list there, those are all free. And that'll at least help you if a banker or an investor or a board member says, what's your plan for this? Might give you a head start.
Any of this AI, are these AI tools or just free?
No, they are financial spreadsheets. So it would be a template that you would download and open up in Microsoft Excel or Google Sheets. And there's no AI aspect here. It's more just ways for you to fit the metrics of your business into a narrative for somebody who's maybe scrutinizing your business to invest, to join the board, whatever it might be. The second one, strategic planning. So earlier, I gave you that 6-part framework. We went from mission to vision to, I believe it was goals to strategy to tactics, and finally to whatever the last one was, metrics. And that is really part of a framework that I didn't invent, but was invented at Intel back in the 1960s. And it was actually made famous by Google about 3 decades later. And this book, Measure What Matters, is like your manual, your Cliff's Notes on how the OKR system works. It stands for Objectives and Key Results. It's a planning framework to say, now that I have my strategy, how do I hold myself accountable and make sure that I'm working on the right things on a yearly, quarterly, monthly, weekly, daily basis? Just read the book. And I assure you, it's going to be very motivating in more than one way. Google Analytics. So I'm guessing all of you have a website. In this conversation, we've talked about the website giving us valuable data on the traction of the business. If you don't have Google Analytics installed, simple thing for you to add to your to-do list, get it installed. Because that or some other analytics system, GA4 is the latest iteration of it, is free. And that's what's so valuable. There are very few products on the market today in any industry that are as powerful as GA4 and don't cost a penny. Rev Genius, very interesting Slack community. Now, it's somewhat technical, but these are all growth leaders, growth marketers, tacticians. So that means you've got sales development reps, you've got sales managers, account executives, a lot of different people coming together. And there's about 60,000 in this Slack community. And what do? They just throw around ideas of what works. Hey, where can I buy a list of people in this industry that I can market to? Or when I'm running an email campaign and no one's opening it, what do I do? Rev Genius is a great place to join and really just learn from people that are in the trenches all day, every day. And the last one is market research. So I'm a big believer that basically everyone in business tolerates blind spots, right? There are so many things we don't know. We know a lot. We could always know more. And research is generally what gets us there. But organized research that is thoughtfully executed can be a very different endeavor altogether. And so great tools for this. Google Forms is a good one if you have a database. If you already have, for example, a list of customers and you wanted to deploy a quick survey to them to say, hey, look, you've been in business. You know me. What is the thing you like most about working with my company? What is the thing you like least? What is one thing we can do better in the future? And on a scale of 1 to 10, how likely are you to refer me to a friend? To Jonathan's point earlier and the power of those organic referrals. That's a short survey. You send that to customers. It takes them a minute to fill out. And you come back with data at scale, which tells you, do this, not that. Or you thought this and you were wrong. Your customers clearly believe that. Imagine how powerful that is. Now, if you don't have the database and you still want the intelligence, you can also go out and license panels. And I work a lot in this realm. I actually started my career in market research and work with clients nowadays to go license a panel. And so I'm running a panel, a survey right now with a sample size of 1,000. And I'm doing it for a B2B SaaS software company that is bringing a new AI product to market. They're bringing it to a specific customer segment of restaurant owners, small restaurant owners, not the franchises, not the chains. How do you find these people? Well, you could spend months or years advertising to them. You could try to write content or go to conferences. One way or another, it's expensive and time consuming. Or for as low as 95 cents a response, you can go out and field a sample. Sometimes you don't need 1,000, you might need 200 just to roll out a survey. And for 200 bucks, you get come back and say, hey, I asked these exact people who I think are my customers, my prospects, and they told me this. And so now I'm doing this and not that. You tell that to your board, your investors, your team, and you all of a sudden have so much more credibility because you've been validated externally. So always happy to talk more about this, but some of these resources I've found are universally helpful to businesses in your position. And that is all I've got for you today. But I wanted to make sure we had a little time left for questions. I'll defer to Chloe and Ariella, but thank you for listening.
Paul, this was amazing, and I'm glad to see founders participating in winning their insights and questions, because that's the best way to learn and grow, and it just shows how much this session was valuable. Thank you, Paul. It's just the top session we needed to close the topic sessions of this program, because coming ahead, it's internal demo day and our coaching group. So this is the last topic session to wrap up this whole program that started as a 1 year and then 2 years and then transitioned into a 1 year. So Paul, top notch. Thank you very much. Founders, we do have like 3 minutes if you have any questions. Paul, did you share how can founders connect with you further?
You can, I'll put my LinkedIn in the chat, and that will allow us to at least stay connected. Feel free to reach out. Also, I'll put my website in the chat as well.
Yes, thank you for doing that. We're big believers in supporting back. So you go into Paul's website, see how you can support back. Okay, time for maybe one last. Oh, I think we finalized the questions part, did we? Or anyone have additional question?
We'll get this. We'll get that slide. Will we get that slide in PDF?
Yes, Paul will send it to us, and Chloe will add it to Discord.
Thank you.
Yeah, this was
Thank you,
informative.
Paul. Great information.
Yes.
Yes, thank you very much. Great presentation.
Great.
It's my pleasure. I wish you lots of luck. I didn't realize this was the very end of your program, so I get to also say congratulations. It's graduation day, so go out there.
Almost. The graduation, they have a capstone in October. But now moving forward, they have group coaching meetings, and we're going to practice on their deck and pitch. So now, thanks to you, the group will also learn how to get all of the information they learned throughout the program and accumulate it to the growth strategy ahead.
Wow, really exciting. Well, thank you for allowing me to be a part of it, and look forward to hearing about all your success. But it's been a pleasure.